Hi, my name is Allan Madan. I'm a chartered accountant and tax expert in the Oakville, Toronto, and Mississauga regions of Ontario, Canada. Today's short video is about U.S. citizens living in Canada and taxes. If you are a U.S. citizen living in Canada, a dual citizen who has both U.S. citizenship and Canadian citizenship, you must watch this video. The U.S. is the only country in the world that requires you to file an income tax return based on your citizenship. All other countries in the world require you to file a tax return based on your residency, that is, where you live and where your residential and personal ties are strongest to. There's been lots of media frenzy in the Toronto Star, Globe and Mail, National Post, and so forth about the IRS coming after unsuspecting U.S. citizens living in Canada for back taxes and for failure to file past due U.S. personal tax returns. The reality is, as a U.S. citizen, you must be aware of the consequences. In some instances, U.S. citizens living in Canada have been bankrupted by the IRS because of the income taxes, interest, and penalties for failure to file imposed by the IRS. So it's a serious issue. Most U.S. citizens who are living in Canada will have to file, as I mentioned, a personal tax return in the United States known as a 1040, but they will not have to pay Canadian income taxes. That's because those U.S. citizens will receive a foreign tax credit on their U.S. personal income tax return for the Canadian taxes paid. However, here's where it gets a bit nasty. The IRS has something known as the FBAR, which is a very long form that the IRS estimates that it takes 6.5 hours to complete. FBAR stands for Report of Foreign Bank and Financial Accounts. The FBAR form, which is a mandatory filing, lists all of your foreign bank accounts, foreign investment accounts, RSPs, RIFs, RESPs, and so forth. Failure to file the FBAR return can result in a penalty of up to $10,000 per year per account. So if you have lots of accounts and you have never filed the FBAR return for many years or at all, you could be subject to tens of thousands of dollars in penalties. In addition to the FBAR return and the personal income tax return, you are required to file Form 3520 for any RESPs, those are Registered Education Savings Plans that you may own for your children, or tax-free savings accounts that you may own. While in Canada, TFSAs and RESPs are not subject to tax on the income earned inside, that is their tax-sheltered investments, they are subject to income taxation in the United States. So U.S. citizens who own RESPs and TFSAs have a U.S. income tax liability potentially on those investments. They are considered foreign grantor trusts by the IRS. So practically, how long do you have to go back? Well, the IRS says that you need to go back 6 years to file past due U.S. personal tax returns. Practically, from experience, 3 years has been sufficient for most clients. In terms of penalties, will they levy tens of thousands of dollars upon you? The answer is it's unlikely unless you had significant assets and you were trying to hide money and substantial amounts of investment or business income. For most clients, I've seen the penalties to be in the hundreds of dollars as opposed to the thousands of dollars. Again, if you're a U.S. citizen, it's really important that you get in contact with a tax advisor such as myself or another accountant to help you file your past due U.S. tax returns. Thanks for watching this video. I encourage you to visit my website, the URL for which is shown at the bottom of the screen, madanca.com. Also, get access to my free report, 20 free tax secrets on how to beat the tax man. Get your free video, visit my website, and make yourself a lot richer. Thanks for watching.